Good morning, ladies and gentlemen, and all you S&P traders and other financial market traders. It is Sunday early, hours before the E-mini starts trading, but I wanted to take a few minutes this morning and just do maybe a little pre-market observation. I don't like to call it analysis, although that's probably what it is, but I'd rather just say observation. And so what I'd like to cover this morning for just a few minutes is the big picture first. As we closed last week, of course, we got 107 points out of the market last week, and you can see all those trades, all 10 of those trades on the previous videos, and also they are logged and documented on my Collective 2 site, and the description's at the bottom of the page here. So am I expecting another 107-point week? No, absolutely not. That's probably a twice-a-year event. And you just have to, when the market's caught just at the right time, just at the right turn, then you can get that kind of movement. I was pretty happy with the fact that the market last week moved about 137 points from the Sunday open until the high close on Friday. And we caught 107 of them. So, and it shouldn't have took us 10 trades. I should have stayed longer and done 0 short trades, but that's the way it goes. You can look at the summary of every one of those trades on my final video of last week too. I kind of laid it all out in the numbers. So that was exciting, and I was satisfied with that. More satisfied that I picked good entries than how many points. Honestly, that's what we're looking for, is good entries. But anyway, let's look at the big picture here. You're looking at a monthly S&P chart. And I know many people aren't used to looking at a monthly chart. They think, what in the world does that have to do with me trading 10-minute time frame? Well, as you'll know as you trade with me more and kind of keep track of what I'm doing here, that big picture takes precedent over everything. Doesn't mean I can look at this monthly chart, obviously, and tell you what it's going to do this week. No idea from this big of a macro view. But the way I trade, I guess I call it Organic Elliott Wave. I could just as easily have called it Distorted Elliott Wave, because that's what the market is constantly doing, is unfolding in distorted Elliott waves. But distorted Elliott wave sounds a little too strange, so I call it organic. And the reason why I call it organic is because I believe the market is organic, in that it's not mechanical. You cannot quantify exactly the swings, the waves, the corrections. You just can't quantify them exactly, and no two pattern repeats itself, just as the snowflakes. The market unfolding each week, each day, each hour is like a snowflake. There are similarities and there are differences. So enough of that. Big picture, Monday or Sunday, December, just haven't even changed my calendar yet, December 2nd. And let's take a look at this. It's interesting, when I went and found a yearly chart, and I know that sounds really strange looking at a yearly chart, but I wanted to see context for these waves here, because this kind of looked like a 1, 2, 3, 4 extended 5 to me. And honestly, when you look at the what is a logarithmic chart of the yearly, obviously because inflation and price and the value of the dollar has changed so much that this changes unless they put it on a logarithmic scale to get an idea of what the market's actually done, adjusted for today's numbers. When you look at the yearly chart, these two humps here, actually, this one's higher than this. It actually does, or actually this one's higher. So this is actually has come up. It had come down and done an A or an ABC and gone up. The last trend in the market, if you trust the logarithmic scale, was a lot longer than this one. So whether this is a complete trend on a long-term chart and this is the turn, I don't know. Elliott wave would obviously allow that. The rule is wave 3 is not the shortest wave. Some people argue that wave 3 has to be the longest wave, but this could be an extended wave 5. Enough of that silliness, because it doesn't matter to us. We're in a correction after the top of what I think was the trend on this monthly chart. Let's go to weekly. And as we showed last week, the weekly came up, it's coming down. And it appears that just like this correction here, that went some 350 points, the correction that we've seen over the last couple of months might be done. Could be, don't know yet. I'll know that probably within the next week or two, whether that one's actually the bottom of the correction. Let's look at the daily. And what I mean by that is I'm thinking that this right here very well could be the only correction, the deepest correction we're going to see for a while, and the market's going to head back up. Why do I think that? When I look at the structure of this, if you look at it in an Elliott Wave structure, which is kind of my best fit, I'm seeing an A, B, C correction here. And now we've gone up to a 1. Yeah, I know that wave 1 is distorted, but again, that's what the market does. It distorts the Elliott Wave patterns, and you get used to being flexible, but seeing the structure. Structure I see here, to make a long story short, is ABC. Wave 1 down to a wave 2, which is typically an ABC, which is a 3-wave pattern, and it is here. And then heading up to a wave 3. Whether it will take out the top or not, or whether it will turn before that. If this is a wave 1, this is a wave 2. The wave 3 can just be a little bit longer than 1. It could come up here, do a wave 4, do a wave 5, and never get back to the top. If that's the case, then the alternative possibility on this big picture chart is that's an A. The B is actually a 3-wave B, will come up here somewhere, and the C will come down. And as anyone who follows Elliott Wave also knows, if the perma bears were right, if this is actually the top of the market for the next few years and we're heading down, then this would be a wave 1. Wave 2 would be a strange extended 3-wave 2, that does happen, and wave 3 will be heading down from there. Nice thing about it is we don't have to know, because we're trading smaller than that. I just want to see what this structure is. What I'm looking at right now in the daily chart is this is telling me this is going up to a wave 3. Till I see different, that's how I'm going to trade it. And then, of course, down to the 6-hour chart, which is kind of where I like to go, the 6 or the 4 to see the medium term. What it did last week, all week long, started here on Sunday, went up, ended on Friday at the very high. It was funny. I was looking at some of the, they will remain nameless. The people on the internet that are well-known stock traders and analysts. I was listening to them talk on Thursday about what they thought the market was going to do, and nobody thought it was going to head up all the way through Friday. But that's because it's a little hard to predict the market, at least to be sure of it the day before until you see what it's doing. But again, we don't have to know what it's doing all the time. We just have to know the patterns, take the high probability trades. That's what we did. In fact, I don't remember talking about it, but my Friday trade, I closed out at 8.5 points. And actually, if I would have kept my original take profit at 16, it would have just took me out at the end of the day. But I took 8.5 for that last trade, number 8 last week. So what's it doing this week? I think it's still heading up. And what we're looking for, basically, what I'm looking for is when it opens today. And again, I'm not opposed to taking a trade early Sunday, although the volumes are very light, if it shows me something very interesting. And if I look on the 1-hour chart here, what I'm looking at, what I think I'm seeing right now on this new trend that started is a 1-2 going up to a wave 3 on the 1-hour chart. And then I'm going to be looking for a correction, a good correction here, looking down at the 15 or 12-minute chart. And if I get a good looking correction here between the open on Sunday and midnight or 11 o'clock before I go to bed, if I get a good correction I can read, I will go long on that. But that remains to be seen what it does, so we'll watch it when it opens today. As far as where I think it's going, that's where I think it's going. Like I say, the other alternative, and I always look at an alternative view, is that this is just an extended, distorted B wave, and the A wave is here. This is going to a distorted B wave. Sorry, let me get back to the daily. 1, 2, 3, and then down C wave. Don't have to know that right now. Right now, this is going at least, either scenario, this is going above this point. So we've got probably without question 64 points in this market to trade before we even think about this turning and actually heading back down into a C wave or a wave 3. So that's how we're going to play it. That's the alternative possibilities. Don't have to know it right now. That's part of the method that I trade. I don't have to know what it's doing tomorrow. I look at the possibilities of what it could be doing, and then I let the market confirm to me what it's doing. And that's how we were able to pull 107 points out last week, and 3 weeks ago I pulled 66 points out of the market. So what's my goal in trading? I kind of wanted to cover this for a minute. And really my goal in trading, my strategy, is to find the highest probability entries I can. And what that means is I'm looking for the ends of corrections. I mean, to put it simply, we have an impulsive move, a correction, an impulsive move, a correction, an impulsive move, a correction, an impulsive move. And my whole goal in trading, in whatever time frame I'm seeing these corrections on, is to trade at the end of a correction. And if you think about the markets, what's the very best trading possibility you can do in any market? If you could get in and identify the end of a correction, like here in a downtrend, and then identify the end of that trend, that's the very best profit you can take out of that market. Identify the end of the correction, take the trend. So the end of the correction is where you want to enter, and you want the market to tell you where to get out. I've heard so many people with these strategies and these gurus online saying, well, here's my strategy, and what I'm looking for is I'm going for 5 points. We're going to set a 5-point stop loss, and we're going for a 5-point take profit. And if you do that so many times a week, you'll make this much money. And unfortunately, the market doesn't always give the 5 points, and many times you get frustrated because the market would have given you 20 points on that trade and you got out at 5. So I think the best thing to learn to do, and what I'm learning to do, have been learning to do this last 3 years, since I had a mentor who taught me this Elliott Wave system and how to identify the ends of corrections and the ends of trends, is to learn how to find the end of the correction, get in, learn how to find the end of the trend, get out, let the market tell me. Will I ever do that perfectly? Nope. But we can do it so well that we can consistently make money all the time. So that's my goal in trading. End of correction to end of trend. The economic news this week. Let's take a quick look at this. This is a strange week, made stranger by the fact that, here's my, let me get to that, the economic calendar. Made stranger by the fact that even though the economic calendar that Forex Factory has up right now says nothing about this on Wednesday, but Wednesday has just been declared a holiday. The New York Stock Exchange and the NASDAQ are closing down on Wednesday in honor of President Bush, who just passed away on Friday. So what that means for the futures markets, I don't know yet. I haven't got anything from AMP. I'm going to guess that they're going to close early Wednesday morning, kind of like they do on holidays, and then open back up in the afternoon and in the evening session. But I don't know. So that's one thing that's kind of strange about the news this week. Another strange thing about the news is when you look at the calendar, Wednesday, when the stock market and the NASDAQ are closed at 8:15 Eastern, 5:15 my time, Fed Chairman Powell is testifying before, who is he testifying before? Joint Economic Committee of Congress. If the market was trading, I think there'd be a little volatility. Now that it's not trading, I'm not sure what's going to happen. That time of morning, if the futures markets, the CME, the Globex do what they typically do, it will still be running at 8:15 a.m. in the morning. But after last Wednesday's speech he made at the Economic Club in New York, and after Thursday's release of the minutes to the Open Market Committee's meetings, it's not logical to think that he's going to say anything in his testimony that will change or have much of an effect beyond what was said last week in two different instances. So I doubt that Fed Chair Powell, even though the markets are closed on Wednesday, is going to have much of an effect on the futures markets. Let's take a look real quick here on Monday. The only thing that looks important, and again, if you want to track the economic calendar, guys, just go to forexfactory.com/calendar. And then over here, you can set up, and I can't remember where it is, but you'll find it if you look around. You can set up your filter. I filter out, I still have some other, this is from my Forex days, and I just haven't changed it. I haven't filtered out all my pound and Aussie and Euro news. That really doesn't affect us much, but I like to kind of keep it up there just to see what's going on in the other countries anyway. And you can filter it so you just show the oranges and the reds, the highest impact and the medium impact that on the market. So the first high impact thing on the market might be tomorrow morning, Monday, at, let's see, that's 7 o'clock my time. 11:12, where's that Eastern? 9:52, what time is it? 11:12. Why is my clock off? Okay, hang on a second. Sorry to do this. Pacific time, Daylight Standard Time off. 11:12, 11:11. Okay, all right, we're good. Save settings. 11:12. I'm not sure. It was showing kind of weird up here for some reason. again, yeah, 7 o'clock. All right, so 10 o'clock Eastern, the ISM is giving us Manufacturing Purchasing Managers Index, Institute for Supply Management. That sometimes moves the markets pretty good. That's on Monday. And then on Wednesday, the ISM does the non-manufacturing PMI, which can move the markets too. Not usually really volatile, but every once in a while, if the number comes in strange, it can. There's a lot of Fed members, voting members speaking at different venues throughout the week. Again, let's just go down here. There's another Fed member speaking, looking for USD. Okay, here's the Wednesday we talked about, Chairman Powell speaking, testifying before Congress. There's the ISM non-manufacturing. Next thing that affects us is on Thursday again, and I think same thing goes, ditto for what I just said about Powell talking on Wednesday. The fact that he's speaking on Thursday at 3:45 p.m. my time, which will be 6:45 Eastern. And what is he speaking at? The Housing Assistance Council's annual event. Doubt he's going to say anything different. Shouldn't affect the markets. Okay, but Friday is the big one. And everybody needs to remember this always on the first Friday of the month is the non-farm payroll, the big monthly employment report. Average hourly earnings, the employment change, the employment rate, unemployment rate. That always throws all kinds of craziness into the market for usually for about half an hour to an hour. If the pattern is very, very clear on Friday morning and I'm not already in a trade and it's at the end of a correction, I will sometimes take a trade before that comes out. Normally I won't do that. Normally I'll let it play out for half an hour, but we got to remember Friday is non-farm payroll, and I'll be talking about that when we get to Friday. So that's the economic news. It's a little weird this week. Well, it'll be interesting to see how it affects things, what goes on Wednesday when markets are closed. And besides that, that's pretty much my wrap up. Again, I don't obsess over what is the market going to do this week. Instead of that, I'm going to watch the market and let it tell me what it's going to do this week. So there's the daily. Let's go back to the 6 hour. Again, I'm looking for something that tells me it's correcting, and it's correcting on the 1 hour chart. If that's a 1-2 going up to 3, if I can get a good ABC correction off the wave 4, and I can see it here in the 12 hour or the 12 minute or the 15 minute, and I can read it well, I'll take it. It might even be that when the market opens up, if it gaps down enough, I've got enough strength in this, looking at this, that I may go long early if we get a good gap down. And it's not because I think the market's going to close the gap. That's not a rule. That's silly. Sometimes the market will gap and it will just keep going, and it never closes the gap, or it closes the gap a week later, and nobody wants to risk that much capital. So I'm not worried about closing the gap. That's not a rule, but when it gaps down in a very strong uptrending market, I don't have a problem going long at that point. And I want to bring up one other point on Elliott Wave, since I pretty much talk a lot about Elliott Wave, but at the same time, I know that the market's full of distorted Elliott waves, and you have to look at structure and pattern and what the price is doing and be flexible with your Elliott Wave. So here's what we talked about, big picture, my alternative possibilities. I'm not married to my forecast. I'll let the market show me. With the method I trade, I don't have to know everything in the future. My goal is high probability entries, and how I do that is trading end of correction, if I can identify it, to an end of trend, which is where I get out. Economic news, we talked about that already, and I wanted to read from Investopedia. Investopedia has some articles on Elliott Wave. One of their articles had a really good concluding paragraph. So those of you who have heard that Elliott Wave doesn't work, or Elliott Wave is crazy, or you can't figure it out, or it's too subjective, I love this article. I just wanted to show you this last paragraph, and then we'll close. The point is, it really doesn't matter if the trader gets the wave count wrong, as long as he or she determines the primary direction of the trend, properly differentiates between a primary and corrective waves, and uses tight stops and realistic profit targets. Trades can still be very profitable. The thing I really agree with there is, doesn't matter if you get the wave count wrong. What you're looking for is to determine the primary direction of the trend. And I call it the impulsive. They call it primary and corrective. Impulsive and corrective waves. That's what we're looking for. We know it. We can many times identify the end of a correction to the point where we can get in right at the end of the correction, and we can many times identify very close to the end of the trend. So sorry, I lost my connection there for a second. So anyway, I was just talking about the Elliott Wave article, and just food for thought there. So I'm looking forward to this week. Looking forward to seeing what it brings. And if you guys stick with me, follow along. If you subscribe to the YouTube channel, every time I finish a trade summary of what happened, then I will post it as soon as I can during the week. And you can also follow each one of my trades on my Collective 2 strategy. The link's at the bottom. So you guys take care. I hope the week goes well. Happy trading.